This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 13th, 2015. Euro dollar. So with the euro taking out some key range support at 107.13 in the previous week, this puts the focus back on a retest of the recent 12-year low from the 13th of March at 104.62. At this point, weekly studies are still tracking an oversold territory, so this is something to think about as it could limit any downside depreciation over the coming sessions. But again, the break below 107.13 does put the focus back on a retest of that 12-year low from the 13th of March at 104.62. At this point, a break and close back above the high from Friday at 106.84 would now be required to take the immediate pressure off the downside. Sterling dollar. So cable has also broken down to fresh multi-year lows below that recent low that we had seen at 46.35, and this confirms a lower top at 51.65 and sets the stage for the next major downside extension towards a measured move objective at 41 further down, at 141 further down. At this point, though, weekly studies here are also oversold, and there could be risk for some form of consolidation or correction before we see any meaningful declines from here. But still, the broader downtrend remains firmly intact, and a break back above 51.65 would now be required to take the immediate pressure off the downside. Dollar yen. So dollar yen continues to track in consolidation, with the market locked between some recent key range resistance and support at 22.03 above and 118.23 below. But again, with the broader structure firmly intact to the uptrend and favoring additional gains, a break above that recent high, that 7-year high at 22.03, going back to the 10th of March, is favored for a fresh upside extension towards the 125 to 130 area further up. At this point, setbacks should continue to be very well supported into the 118 area, while only back below 115.55, the low from December, would compromise the highly constructive outlook for dollar yen. Euro Swiss. So Euro Swiss finally closed below 104 on Friday, and the daily close below 104 does open the door for deeper setbacks towards next initial key support at 103.55. A break and close below 103.55 will potentially open further acceleration to the downside back towards parity, while at this point a break back above 105 or 104.95, the high that we saw on the 6th of April, will be required to take the immediate pressure off the downside. Aussie dollar. So Aussie right now is locked within a very well-defined downtrend, with the market recently trading down to fresh multi-year lows at 75.33 back on the 2nd of April. This low is now back under pressure, and a break below will do a good job of opening the next downside extension towards psychological barriers at 70 further down. At this point, any rally should be very well capped ahead of 78, while only back above 79.38 would compromise the bearish outlook. Dollar CAD. So dollar CAD continues to be very well supported on dips ahead of that critical support at 23.50, and the market remains locked within a bullish consolidation, with a break above the recent 5-year high at 128.35 favored for a push towards the 2009 peak at 30.65 further up. At this point, only a break back below 123.50 would delay the constructive outlook. Kiwi dollar. So the New Zealand dollar remains locked within a well-defined downtrend, with the market recently stalling out at 77 and looking for the formation of the next medium-term lower top at around 77 ahead of a fresh downside extension below the recent multi-year lows at 71.76 and towards the next critical psychological barriers at 65 further down. At this point, only a break back above 78.90 would compromise the overall bearish outlook for the New Zealand dollar. SPX 500. The S&P 500 continues to chop around, trading between the 2120 record high and 2040 critical support, going back to the low from the 11th of March. A break on either end is now required for clearer directional bias, with the establishment above 2120 to expose 2200 further up, while inability to establish above 2120, followed by a break back below 2040, will confirm a potential major top and acceleration to the downside. Gold. So gold continues with its constructive price action in recent trade, following the recent support ahead of that critical 2014 base at 1131. At this point, a fresh upside is now favored above key resistance now at 1223, with a close above to open the door for a push back above 1300. Any setback should be very well supported ahead of 1178, with only a break back below this level to compromise the recovery outlook in gold.